Zoom because it's not a committee meeting or a public hearing. And we are going over with the comptroller some of the information that they provide all during the year. And so let's see who's here. Madam Co-Chair, any words of wisdom?
Not this morning, except welcome to our colleague and the new comptroller. It'll be a pleasure working with you in the coming budget and everything, because you'll be familiar with all the woes that we have. So we appreciate it, and I like starting out with informational. So thank you, everybody.
Representative Nutrio.
Oh, I'm sorry. Oh, there I thought I was muted, and I'm not. Good morning, everybody. It's good to be here. I'm very anxious to go over this report, and I'm sure I'm going to have a lot of questions, as will other members. So I look forward to listening, learning, and getting some more information.
Senator Berthal, are you here yet? So I'm sure he'll be on later. Mr. Comptroller, would you like to start us off?
I would. Thank you, Senator, and good morning, everybody. It's great to be here. Senator Austin, Representative Walker, good to be back working with you. Representative Nuccio, congratulations on your new position. Look forward to working with you, and of course, to Senator Berthel when he joins. It is really great to be here this morning. I'm in my 8th day as the new state comptroller, but it was important for us to come here this morning and chat with all of you for 2 reasons, really. Number one, to give folks an overview of our office. Even the most senior members of the legislature sometimes don't know all of the interesting things that we do at the Office of the State Comptroller. We sort of are a catch-all agency that does a lot of different things, but one of the things that we do is certainly on the budget. And this morning, you'll have a presentation from 2 amazing people in our office. First is Carol Salwin, who is the Division Director of the Budget and Financial Analysis Division of the Comptroller's Office, and then also Charlotte Moeller, who was, until 8 days ago, the economist for the office and is now the policy director of the office, working in my executive staff. They are going to give you a pretty broad overview of both what we do in the agency, but then also where we're at in the budget. And spoiler alert, without ruining their presentation, we are in good shape. And there's a lot of positivity that we should be talking about and celebrating as far as I'm concerned. There are some cautionary notes, of course, as everybody on this committee probably knows, but we are in a very unique position compared to where we've been in the recent past. A lot of that has to do with some changes that we made a couple of years ago, and that I certainly am advocating continuing. But a lot of that has to do with the great work of the legislature and both sides of the aisle working together to change Connecticut's situation. So with that, I will stop and just lastly say that Kevin Kurian is my legislative liaison, and he is very easy to find, as am I. I am once and always a House guy and always available to people. And so if anybody on this committee has any questions about this presentation after the fact, please reach out to me directly, reach out to Kevin. And if we can ever do anything to help your constituents as sort of the constituent people who pay the state employees, oversee their healthcare, oversee their retirement, we stand ready and willing to help with that as well. So with that, I'll kick it over to Carol and Charlotte and just say thank you again this morning to Tony and Kathy for having us.
Great. Thanks, Sean. Good morning. My name is Carol Salwin, and I joined the Office of the State Comptroller in April of last year, so I'm relatively new to the state. I'm very excited for the opportunity to provide you with an overview of the OSC and our key deliverables. Charlotte is going to show you a few useful resources on the OSC website and provide an economic update, as well as share some upcoming legislative topics that are of interest to the OSC. And hopefully that will leave us some time for your questions. And we will, I mentioned this previously, we will be providing these slides. Sorry, we didn't provide them ahead of time, but so no need to frantically take notes. So with that, the mission of the OSC is to provide accounting and financial services to administer state employee and retiree benefits, to develop accounting policy and exercise accounting oversight, and to prepare financial reports for state, federal, and municipal government and for the public. We have recurring expenses of about 30 million annually, and we have a staff of approximately 250 employees that are structured into the 6 divisions you can see on this slide, as well as an executive office. Next slide, Charlotte. Great. The OSC Executive Office includes key leadership, oversight of the agency's strategic policy, vision and initiatives, legislative agenda, legal oversight, operations, strategic planning, constituent outreach, and internal and external communications. There are also a few programs or funds that are organized under or report directly to the executive office. In the second bullet, you can see those. So the Connecticut Essential Worker Relief Program was approved by the Connecticut General Assembly to make $34 million available in assistance to support the critical workforce that contracted COVID-19 while reporting to work on site. Funds remain for this program, and those will be made available for the premium pay program. The premium pay program provides support to the critical workforce that helped to keep the state operational during the pandemic. It had amazing participation, and in the November special session, an additional 45 million of funding was added to the original funding of 30 million, and program benefits for this program are expected to be paid out early this year. And then last but not least, the Connecticut Retirement Security Program, also known as MyCT Savings, provides access to retirement savings to private sector employees through automatic payroll deductions. Employers who meet the program's criteria are required to either enroll their employees in MyCT Savings or provide their own retirement plan. There's a fun fact. The average age of the current executive office is, if somebody else can read it, I can't read it because I have the
it's
everybody's
34.75.
Okay, thank you. I have like the people on the right, so I couldn't see the number, and you added that fun fact
I
late in the
did,
game
yep.
to me, Charlotte.
Yep, I thought you might like that one.
All right, perfect. Thank you. Now getting into the divisions, we have the Active and Pension Payroll Services Division. This division pays all state employees, coordinates all payroll deductions, maintains records on payroll taxes and deposits, federal and state income tax withholding and Social Security contributions. It administers state pension plans serving more than 66,000 retirees and optionees, and it processes reimbursement payments to all collectively bargained state employees for approved tuition, travel, training, and conference costs. And then the fun fact for this division is that it processes 5,000 checks and 60,000 direct deposits biweekly. That 5,000 checks, we still have a small percentage of employees that are resistant to not getting a paper check. Central accounts payable. This division processes payments to state vendors daily via check, ACH, wire, or gyro, which is kind of an interagency kind of EFT. It co-sponsors the P card program with the Department of Administrative Services. P cards are state-issued credit cards that provide a more efficient means of payment versus like the traditional purchase order invoicing process for certain expenses. And we get a rebate based on total spend and timely payment. This group also handles auditing vendor payments and providing oversight of policies and security roles. And a fun fact about central accounts payable is that the state has more than 200,000 suppliers in our centralized vendor file. Moving on to healthcare policy and benefits division. This group administers benefit programs for all state employees, retirees, and their dependents. It oversees the administration of the Medicare Advantage plan for 60,000 retirees over the age of 65. And it oversees collection of contributions to the Retiree Health Fund, which provides funding for post-retirement health benefits and is also responsible for group life, unemployment insurance, and other supplemental benefits. This division also provides administrative support for the Healthcare Cost Containment Committee, which is a labor management committee that reviews cost reduction opportunities and other changes to medical, pharmacy, and dental benefits. And then an interesting fact about this group is Connecticut's medical, pharmacy, and dental benefit programs actually cover more than 270,000 lives. Core CT. So this group maintains Core CT. You can read all of the functions of the system in that first bullet, but basically Core CT covers most accounting and HR functions, which is quite an achievement to have one system that does all of that for the state. This group also provides reporting and data analytics to agencies and advises the comptroller regarding strategic information technology issues that impact the state. This group is currently in the midst of a Core CT modernization project, which will include migrating Core CT to the Oracle Cloud infrastructure. And then a fun fact about Core CT is that it has over 50,000, it's used by over 50,000 state employees, and the system processes 2 million payments per year and also contacts over 6 terabytes of data, which I'm not sure what that is because I'm not a IT person, but I guess it's a lot.
If anybody's picking up on a theme of fun fact disclosures, it's because I have challenged our team to come up with all of these facts, both good and bad, about what we do as a state and share them with the public, so that the budget and what we do as a state government is much more accessible and understood by people through these fun facts. So you'll be seeing a lot more of those from our office pretty soon, but this is just a little bit of a flavor of it.
Thanks, John. And then the Retirement Services Division administers state pensions. It's the administrative agent for CT, State Employees Retirement Commission, or CERC, which is responsible for several different retirement plans and covers most state and many municipal employees. It maintains member accounts, determines benefit eligibility, establishes monetary entitlements, and serves as an information source to members of the state's retirement systems. A fun fact about retirement services is this program includes nearly 145,000 active and retired members. Most state employees automatically become members of the State Employees Retirement System, or SERS. You probably have heard of it. SERS is the largest and unfortunately the least funded of the retirement systems that RSD administers. And Connecticut actually has one of the lowest funded ratios in the country, with only New Jersey and Illinois having lower funded ratios. Many factors contributed to this underfunding, including a late transition from pay-as-you-go to actuarial-based funding, and then even subsequently failure to make those recommended, they call those recommended annual payments. It's known as actuarially determined employee contribution, or ADEC or ADEC, in certain years following that transition from pay-as-you-go. But fortunately, over the last decade, the state has taken a number of steps to improve this funding. It has negotiated reduced benefits and eliminated the provisions that permitted the state from avoiding paying its full ADEC payment, in prior years. And the state has also recently mandated that significant budget surpluses must be used to pay down the outstanding pension debt. And then on the next slide, you may have also heard of the Budget Reserve Fund, BRF, or the Rainy Day Fund. With this fund, revenue from what we call volatile sources are subject to a revenue volatility cap. These sources are personal income tax revenue from estimated and final payments. So this would be generated from taxpayers who make estimated tax payments on a quarterly basis as opposed to as a payroll deduction, and then also pass through entity tax revenue, which would be that partnerships and S corps would be those entities. And amounts above that cap are transferred to the Rainy Day Fund, which is projected to be $1.85 billion for fiscal year 23. The BRF is also capped at 15% of general fund appropriations. So that would be $3.31 billion for fiscal year 23. And then any excess must be used to make supplemental pension contributions to SERS, as well as to teachers' retirement, or TRS, TERS. And any general fund surplus, which is currently projected to be about $1 billion for fiscal year 23, is also used to reduce the SERS or the TRS unfunded liability. In the chart on the right, you can see that between fiscal years 2020 and 2022, 5.8 billion of additional payments were made to CSRS and TERS, with an additional 2.9 billion projected for fiscal year 23, which will give us a total of 8.65 billion in payments made related to this fund. Without these transfers, the unfunded liability would have the unfunded liability would have had a funded ratio of only 40.8% versus the current funded ratio of 48.5%. And the ADEC for fiscal year 24 would have been $266 million higher than it's projected to be now. At the bottom, you can see the BRF ending balance for the last 10 years with tremendous growth in those last 5 years, in large part due to certain fiscal responsibility policies passed during this time, which Charlotte's going to provide a little bit more detail on in the next slide.
Thanks, Carol. So, as Carol mentioned, several policies led to the filling of the state's rainy day fund and these historic supplemental pension contributions. So I just want to talk a little bit about how successful these policies have been and just how much they've made a difference over the last 5 years for the state's financial position. So briefly, Carol already mentioned the revenue volatility cap, and this policy has been particularly successful since after its passage, the stock market has performed really well. So, we've had historic revenue volatility contributions over the last few years. The second policy is the revenue cap, which limits appropriations to a certain percentage of estimated revenue, and the spending cap, which limits expenditures based on income growth or the consumer price index, whichever is greater. So, these policies have had, multiplying effects over the past 5 years. They help to grow the rainy day fund, and they can protect against drastic expenditure reductions and tax increases if we were to see an unexpected downturn in the economy. So, as I mentioned, the Budget Reserve Fund reached its cap in 2020 and has remained filled to its maximum ever since. This is a huge, plus for the state in case of an economic or financial downturn. We've had 4 consecutive years of general fund budget surplus. The previous 4 years of that, we were operating in a deficit. As Carol mentioned, the state also contributed $5.8 billion to reduce pension liabilities since 2020. This reduces the share of current and future budgets dedication to long-term liabilities, which can free up spending for more important areas. It reduces the strain on future taxpayers, which is huge because in the past, the fiscal irresponsibility of not making the ADEX, not making the full ADEX, sort of kicks the can down the road and sort of multiplies the problem worse for future generations. So it's really important that we, take this seriously and, start to make changes now so that, future and current Connecticut residents, don't have to deal with this problem. We've also received multiple credit rating upgrades from several agencies, which makes borrowing less expensive for the state. And then finally, this just ensures the promise that we made to state employees, that we respect the promise that we made for their retirement. And lastly, most importantly, it reduces general fund revenue volatility and encourages predictability in the budget process.
Great. Thanks, Charlotte. And then last but not least, we have the Budget and Financial Analysis Division, which I'm the director for. We ensure statewide compliance with established accounting policies. To put it another way, we are the accounting resource for all of the agencies. We develop and implement the OSC's budget, as well as the fringe benefit accounts. You can see that the chart to the right with the fringe benefit accounts. Fringe benefits include several categories of benefits provided to employees beyond wages and salaries, such as health and retirement benefits, and these are also among the highest general fund line items. BFA completes and submits cost accounting reports that generate revenue by identifying recoverable expenses. For example, the state is allowed to recover from federal grants a portion of indirect or administrative costs provided by central agencies, and state agencies are allowed to bill certain direct costs like fringe benefits to federal funding sources. So we assist the agencies in doing that and recovering those expenses, from the federal government. Charlotte is going to show you we can find the next 3 bullets as well as some other resources on the OSC website in a minute. But just we have annually we do the statutory gap budgeting annual report, and that compares actual operations for the fiscal year to the budgeted plan. We have the annual comprehensive financial report, or ACFR, and this provides fiscal year generally accepted accounting principles or gap-based financial details for all of the state's funds and quasi-publics. The state ACFR also contains a management discussion and analysis section that looks beyond a single year of operations of the general fund and discusses the state's balance sheet positions, their assets, their liabilities, and their fund balance across all state funds. And then, our group also produces monthly financial statements, the letter to the governor, and an economic outlook. And then our fun fact is that BFA had teamed with Central Accounts Payable within the OSC, as well as the Treasurer's Office and the Office of Policy and Management, or OPM, to recover $128.9 million in FEMA reimbursements for the state's COVID-19 testing program. So I'll turn it back over to you, Charlotte.
Thanks, Carol. So like Carol mentioned, I want to show you guys where you can find all this information so it can be most useful to you. So I'm just going to take you to our website. Can everybody see the website okay? Okay, great. So here is the comptroller's homepage. You can see Sean's new headshot right there. And on the homepage, Carol mentioned some of our biggest programs earlier in the presentation. So if you ever wanted to find out more information about them, these links here will take you to their websites. So for example, we have My CT Savings and we have Premium Pay right here. So if you ever needed to lead a constituent, to the website to find more information, it's right on the homepage there. But as far as some of the reports that Carol mentioned, the place that you're going to want to go is up top on the right under Resources 4, and then you are going to select the public. And once you click that, you will be taken to this page here, which has all of the reports. So the first link here is to Open Connecticut, which I will get into in just a minute, but that is another great resource for you. Here is where we have a lot of the financial reports that Carol had mentioned. We also have a link to the bond allocation database, and this is where you can go into the database, search by funds, by program, by municipality, if you ever have any questions about anything. And then we also have a link to just some of the state job openings. Down here, you can also find some of the retirement systems actuarial reports. So if you ever had any questions about the ADEC, the funding ratio, you can click in here and find the reports for our different retirement systems. So I'm going to click into right here, the comptroller's reports, and just show you this page. So this is where you can find a lot of the financial reports that Carol had mentioned. We have our monthly letter here, as well as the state's financial statements. And you can find those, dating back, every month, for at least the last 10 years. You can also find reporting that we do for fiscal year end on this page. You can find our annual comprehensive financial reports, reports on OPEB. You can also find our partnership plan annual reports on this page, as well as information on the health equity study that our office did. And now I will show you a little bit about Open Connecticut. So I'm not sure how much all of you know about this, but this is a wonderful resource that I think is probably underutilized. So this is a transparency initiative that is spearheaded by our office called Open Connecticut. And this is where you can find up-to-date financial information that our office transacts on a daily basis. This is a great resource if you get questions from constituents and you don't know if the information, where to find it. Oftentimes you can find it here. So if they have questions about a specific vendor payment or something about the budget, or who makes the most money as a state employee in Connecticut, you can find a lot of that here on this website. So it's a really great tool, I think, for legislators to know about. The first application that we have is called Open Budget. And Open Budget shows expenditures and revenue information. So you can track, what the state has spending versus what was budgeted. And this is updated monthly. So you can find really up-to-date information on here. I can just click in to show you a little bit. You can search by revenues, by expenses, and then you can drill down even further from there by department, agency, line item. So you can really find some great information in here. The second one that we have is Open Checkbook, and this is where you can see who's received payments from the state, how much that payment was, when they received it, and that is updated every night. So the information is quite up to date. So if I just click in here, very similar to Open Budget, but you can see, transactions down to the vendor, service, top categories, and again, you can search, by really, any variable you'd like. The next application that we have is the state payroll right over here. This is probably the most popular application that we have, and this is where you can see payroll information for state employees. So you can see it by agency, by department, or even by individual. And this is updated bi-weekly along with paycheck periods. And the last application that we have is the state pension application. This is where you can see pension information for retired state employees. It's updated every month. And again, like I keep saying, you can drill down by department, agency, you can drill down all the way to the individual level. So you can see, how much people are receiving their pension, what state they're living in, and all sorts of fun information like that. So like I mentioned, our office would be happy to do, any sort of training or more information on Open Connecticut, because I think this could be a really great resource for you and your constituents if they get questions. All right, so now I'm going to talk a little bit, get more specific about some of the reports that our office issues on a monthly basis, one of them being the monthly letter to the governor. So this is a letter that our office produces on a monthly basis. It's a letter that we write to the governor reviewing OPM's financial projections. We also provide the most current financial statements as well as an in-depth economic summary. You can find these documents, all of them, on our website. They're most often posted on the first of the month under that tab for the public. And I'm going to go through some of the things that you can find in this monthly letter, how it may be useful to you, and how it can inform your work at the legislature. So right now we are halfway through fiscal 23. So we are, analyzing OPM's projections for revenue and expenditures through the end of this fiscal year, ending in June. For this fiscal year, fiscal 23, we are projecting a general fund surplus of just over $1 billion and a transportation fund surplus of $226.6 million. And you can see on the chart on the bottom left there, the monthly change in our general fund projection. So there was a built-in surplus of $299 million, and it has slowly increased over the last 6 months and now sits at just over $1 billion. And so some of the reasons for this change in the projection and the increase, the first occurred for the consensus revenue forecast that OPM and OFA have to come to. And they increased projections for several categories, including the sales tax. With high inflation right now, we are just seeing increased collections for the sales tax, as well as investment income. That's also tied to the rising of interest rates. So we are seeing some increased revenue from that. On the federal grants side of this, We are seeing more money due to the federal government's extension of the public health emergency. We also saw a reduction in the transportation fund surplus projection due to the special session where you all extended the gas tax suspension. So we did see a little bit of a change in the projection for the transportation fund there. And then also, like I mentioned, expenditures are down, due to the public health emergency by the federal government, as well as position vacancies at state agencies. So we're seeing positions open, statewide for several agencies and open for a little bit longer than normal. And then there on the right, you can just see, the last decade fiscal years and the general fund result, sort of what I was hinting at before about how, we've really changed things around over the last 5 years. And then also in the letter, like we mentioned, there is an in-depth economic summary that is an addendum to the letter. And, I just want to give you an example of some of the things that we talk about in the letter, some of the indicators that we forecast and that we track, and how that can inform the work that you do. So the first thing that we look at in our monthly letter is the labor market on both a state and a national level. The labor market in 2022, which we just moved into 2023 for calendar year, was extremely strong. We had unemployment return to record lows after the COVID-19 recession. US payrolls recovered 100% from almost the 22 million jobs that we lost just in March and April of 2020. So that is very incredible. There were also plenty of job openings here in the state, also across the country. We did see a bit of a churn in the labor market with regards to, the great reshuffling and a labor shortage and high quit rates. A lot of this was due to people sort of reassessing their career and how they wanted to earn a living after the COVID-19 pandemic. People were considering, work from home, requirements, and that's something that, they wanted to keep doing. People realized that they might not be making, enough money as they deserve in their industry. So we saw a lot of these changes over the last year. Some of them have been positive. We did see increased wages, especially in the low wage sectors. Unfortunately, a lot of that has been eaten up by inflation, but it was some of the largest wage increases we've seen over the last 50 years. In the chart on the bottom left, you can see some fast facts, some of the most recent statistics for both the US and Connecticut. So you can just see things like the unemployment rate there, how many jobs are open in the state and nationally. You can see our monthly job growth, et cetera. And we have a ton of more statistics and facts that are in the monthly letter. So if you ever want to go and find any economic information all in one place, the letter is a good place for that. And then looking into 2023, we also try to do, some outlook, some forecasting to see, how the labor market is going to change into the next year. So there's several actions being taken by the Federal Reserve to bring down inflation. That is their #1 goal right now. And a lot of those actions will have an impact on the labor market. We're going to see job growth slow down. We had really, really, really strong job growth over the last 2 years. And we will start to see that taper off into this year. We're already starting to see it happen. Specifically, we might see that in certain industries that are normally tied to economic growth. Construction and manufacturing being two of those. You usually see high construction and increased manufacturing when there's an economic boom. That's an indication for future growth. But due to the slowdown that we're going to see, we might see some changes in those industries specifically. We're probably going to start to see the market become less favorable to job seekers. And we will see wage growth moderate. We're already seeing that in the last month. And the unemployment rate, our projection is that it will rise. We will see unemployment rise, but it should not reach over 5% in 2023. If we're going to see any sort of, layoffs and recession, it will be much milder than anything we have seen, especially milder than what happened in 2020, as well as in 2008. Another issue that we're seeing in Connecticut, but multiple states are across the country, is the reduction in the labor force participation rate. And this is just an estimation of the state's active labor force, people who are actively working and are of working age. And this was really, really significantly affected by the COVID-19 pandemic, for a number of reasons. We saw some people leave the workforce due to childcare issues. Kids weren't at school anymore, so someone had to take care of them. So we saw a significant number of people leave the labor force in order to stay home and take care of their children. We also saw a lot of people retire early. So leaving the labor market early because they said, I just can't do this anymore in this COVID-19 world. I'm just going to retire early. We also saw just some people who said, I'm too afraid to go back to the office because of COVID-19. The virus sort of kept a lot of people out of the workforce. Another trend we're seeing over the last 2 years is a reduction in immigration. This is on a national level, and this is really affecting the labor force participation rate because the US's population, has declining growth. So we physically do not have enough people to fill the jobs that, are needed here. So if we continue to see immigration stalling on a national level, that is something that, statewide and nationally will not be able to fill all of the jobs that we have. And, you might be asking, how is this sort of, relevant to, the work that I do, and, how can this help inform the work that I do? I think this is really helpful as an indication of, where we've been, where we're heading economically, but also sort of what your constituents may be feeling and what they may be experiencing on a daily basis. On a more practical level, this information also helps our office, as well as OPM, OFA, sort of forecast things like how the income tax might be doing. When we look at the labor market, we can see, where is the income tax? Where is withholding heading? So all of this information sort of informs the work we do around that. The next sort of category of economic indicators that we look at has to do with inflation and interest rates, which I know is an area of particular importance to you all right now, because this is affecting everyone. So the most widely reported measure of inflation is the Consumer Price Index, and that looks at the change in price for a market basket of goods. And the CPI peaked at 9.1% in June of 2022, which was a 40-year high. We have seen a bit of a moderation in inflation. The annualized rate has slowly decreased over the past few months and now sits at 7.1%. And you can see sort of the change in the annualized CPI in the bottom left chart there. So as I mentioned, the Federal Reserve has sort of met their mandate of maximum employment. So they've really now shifted into focusing on bringing price stability back. And a lot of this inflation came, due to the pent-up demand from the pandemic and a lot of those supply chain issues, which we are seeing some moderation in those issues, which will hopefully also help along with the monetary policy that the Fed is doing. So they've made 7 rate hikes over the last year and a half, and their target range sits at 4.25% to 4.5%. Their longer term goal is an inflation of about 2%. And we were hovering at or under that, for the last decade or so. So the last 2 years is really an elevation in prices that we've seen. And, the projection for the federal funds rate is going to reach over 5% this year, but then slowly come down over the next few years. And unfortunately, these things take a lot of time. This is not a problem you can solve overnight, but we do believe that inflation will come down slowly over the next few months, but it may take some time before consumers see real relief. There are many things that can cause price changes. I know probably some of you have gone to the grocery store and have just been wildly surprised by how much basics are costing now. I know I went to the grocery store the other day and the price of eggs was the highest I've ever seen it. So it's going to take some time before these things come down. On the flip side of this, one of the markets that is quite affected by the change in interest rates is the housing market, which has been another sector just completely changed by the COVID-19 pandemic. When people have to work from home, people need homes to work in. So that created a really, really strong demand for single family homes, not just only in Connecticut, but in the whole country. So the housing market experienced inflationary pressure with year-over-year monthly mortgage payments increasing 64.6% from $1,242 to over $2,000, while the median family income only rose 4.6%. Mortgage rates have also doubled where they were a year ago. They reached over 7% at the tail end of 2022, but they do appear to be coming down a little bit. We should be seeing some price moderation. You can see in the bottom right there, we have the median existing home sales price. This is on a national level. So we had the all-time high of almost $415,000 for a single family home in June. That's come down over the last few months, but the median home sales price is still much higher than it was before the pandemic. Something else that is concerning, the annual share of first-time home buyers is the lowest it's ever been, and the average age is the highest it's ever been at 36. So this is something that our office is really keeping an eye on and trying to track, how inflation, may be changing, if it's getting better. And, we're keeping an eye on the forecast because we know that is, something that's really important and affecting constituents right now. Like I mentioned, this is a really, really tough issue because we all want to do what we can to make things better. But unfortunately, this is something that really can't be fixed on a statewide level. This is a global issue. There are short-term solutions like providing some one-time relief, which can be very effective. But I think this is something that's going to take a little bit of time for it to come down. And lastly, some of the economic indicators that we look at also are GDP and consumer spending, both on a state and a national level. So US GDP increased at an annual rate of 3.2% in the third quarter of 2022, while Connecticut GDP increased at an annual rate of 2.5%. So this follows 2 consecutive quarters of decline on a national level, not quite for Connecticut. We didn't have 2 consecutive quarters of decline, we only had 1. And this sort of caused conversations about if, as a country, we are in a recession. There are tons of, academic, economic, definitions for what a recession is, but sometimes I think that misses the point of how the average person is feeling. So whether or not, we are officially in a recession or not, we know how people are feeling. Connecticut has followed national GDP trends for the last few years, and a lot of the slowed growth that we're starting to see can be attributed to the US being in a trade deficit, a lot of the excess business inventory. Because of the COVID-19 recession, businesses are having a really hard time managing consumer demand and buying the proper amount of inventory. So you might have seen businesses sort of over purchase for the holiday season and then sell less of what they had. So now they have an inventory that doesn't match the season. So a lot of that was really tough for businesses last year, but should be getting a little bit better into this year as some of those supply chain issues get better. We are projecting GDP to remain positive into 2023, but growth will be much slower than it was in 2021 and 2022. And this is really because of the Federal Reserve's monetary policy. Their intention is to slow growth. Unfortunately, we will see some layoffs and potentially a mild recession, but all of that is a necessary evil in order to bring down inflation. What's driving a lot of this is the strong consumer demand. The more demand that we have, the more people are spending their money on goods and services. Unfortunately, that keeps inflation high. And all of that is despite the fact that we don't have any more economic stimulus and the high prices. So unfortunately, households are dipping into their savings and taking on more debt. The personal savings rate right now is at about 2.4%, which is sort of what we were seeing around 2008. And household debt is increasing. It increased by 351 billion in the third quarter, which is a 2.2% rise from the previous quarter and the largest nominal quarterly increase since 2007. So, these are just a few of the economic indicators that our office tracks and that we report on, and hopefully can help you in your decision making. And I just want to say, if you ever have any questions about any of these indicators or an article that you read that talks about GDP or anything like that, feel free to reach out to our office. We look at this stuff every month, so we'd be, happy to help answer any of your questions.
Thanks, Charlotte.
Mm-hmm.
So we hope you found this presentation helpful, and our goal for this is for this to be the beginning of an ongoing conversation with the Appropriation Committee and not just a once-a-year event. So, kind of echoing Charlotte's what Charlotte said, whenever you have any questions, feel free to reach out to us. We also, as Sean mentioned, want to make our reporting more user-friendly and understandable, even to those who do not have a financial background or maybe legislative experience. So just as a quick example, this is our present, what the letter looks like. And then, Sean, if you go to the next slide, as a quick example, we're working on a new slide, and I think Sean wanted to do maybe a 60-second video to accompany the monthly letter of the first. And rather than just providing financial and economic information as we do currently in our monthly reporting, we're looking to provide more guidance on what it actually means for the state. And then apropos to Sean's experience with New Haven's Tweed Airport, this slide looks at these factors for the state using the analogy of a plane. So a tailwind is what allows a plane to speed up, so what benefits the state, and a headwind would be what would cause a plane to slow down. And like Sean mentioned, we have a fun fact at the bottom too with that. So that was just something that he sort of wanted to do. Thought it for the constituents, it might be a more interesting portrayal of the state of the state from an economic and financial perspective on a monthly basis. All right, so that I think is the end of the presentation. So we welcome any suggestions or feedback from the committee based on what you would like to see and what you feel would be of benefit to you and your constituents. And I don't know if I see a hand raised already. So
No,
I think we have some questions.
I'll do the hands.
Okay.
That way you don't have to do that, Carol.
Okay.
So I have a couple of questions. And one of them is, you talked about the state having most of their information on core. Is all of the higher ed, the Board of Regents and UConn Health on core for information relative to that?
They are not all of them are on core. There is some information that's on core that they have on core. We do collect a certain information from them just to be able to roll it up from a statewide perspective, but they are not fully on core.
So what is not, is Board of Regents on core?
I apologize. I'm going to have to get back. I know the answer that it's not. They're not fully utilizing core like a lot of the agencies are. I'll get back if I can. I'll get back to you as to what exactly they use and don't use on core CT.
Okay. And that would be also true for UConn and UConn Health.
Yep. Yeah. So UConn Health, Board of Regents, right?
And my second question is relative to teachers' retirement.
Mm-hmm.
Do you have teachers' retirement on core and access to teachers' retirement?
am not sure if teachers retirement is on core. We do, teachers retirement is its own, they handle their own retirement, their own group. I do know that, so I would say they're not on currently, but there is actually, as part of that optimization initiative that we were talking about, what part of that initiative involves getting teachers onto core. So that is something that we're working to do with the migration to the cloud that we're doing for Core CT now.
Thank you. And we're going to go to 2 questions, but I'll start with the chairs and the ranking members. Representative Walker.
Thank you, Madam Chair, and Carol and your team. This was fantastic. This was a great presentation. I mean, for me, who've been here a long time, you answered many questions that I've always tried to figure out, who do I call to find out about? So I hope you understand that you now have opened up Pandora's box for us, because we all have continued questions and things like that. And it really, I appreciate this. I look forward to getting the presentation and following up on some of the issues that you identified. I hope everybody looks at all the different reports that come out from you, especially your monthly letter, because that really does help us in understanding where we are with lapses, with carry forwards, with bottom line budgets, et cetera. This is critical for us so that we know where we are as opposed to making guesses. So thank you very, very much. Kathy took my first question, so I have one other question, and then I'll sit back. You talked about a vendor file that you had that you keep with your vendor file. How does the process on becoming a vendor, is that on the website, or is that in there so that people can tap into it to figure out what they have to do to become a vendor?
I'm not, so that's Central Accounts Payable Division, which is not my division. So I don't know if it's on the website, but I'll find out for you.
Okay.
If that is something that's on the website, and I can share that with you if somebody does want to become a vendor of the state. I know there's an entire, as you're probably aware, there's an entire request for proposal process for any kind of significant vendors. So we do a proposal process. I know that there's definitely, as part of what the state does as part of that is they do look for Connecticut-owned, minority-owned businesses. So there's a whole process with regards to that.
That was what I was, my next part of the question would be, is identified by minority and Connecticut owned and things like that. So that would be helpful. If you could find out and just let us know, I'd really appreciate that.
Yeah, I can actually jump in here, Carol.
Okay,
I
sure.
just went on the website, and let me see if I can pull this up again. Let me see if you can see this. Can you all see that?
Yep.
Okay, so this is on our website. Let me just show you how to get here. So if you're on our homepage, and you scroll to resources for that top there again, and you go to vendors, you can click there, and here's where we have all the vendor resources. So you can see right here how to become a state vendor, and it takes you to the portal there. So this would be a great resource if anyone ever asks you.
Awesome, thank you so much. Thank you,
Thanks,
Madam Chair.
Thank you.
I only did 2.
Senator Berthel, and thank you for being here.
Yeah, thank you. Good morning, Senator Austin and other members. Charlotte, Carol, thank you very much for a very informative presentation. I think not for today, obviously, I know we're in a limited amount of time, but I think there is some concern amongst members of the legislature and the committee regarding the state partnership plan and the performance of that plan and how it has hemorrhaged money for a number of years and so on and so forth. I don't want to get into details now because I don't know that I'm adequately prepared for all the questions I'd like to ask, but I would like to see if we can arrange for the leadership of this committee to maybe have a drill down meeting with you guys in the office to get an understanding of that plan, because if we're doing all these great things right now, which it truly sounds like we are, we've had some great successes, as you both articulated very well, in terms of good policies that went into effect a few years ago that we're seeing the benefit of. If there are things that aren't working well, sometimes you got to, fish or cut bait, as the old saying goes. And we are, I think, perhaps coming very quickly to a crossroads for that plan to have to make some crucial decisions. So, that's all I wanted to say with that, Madam Chair. I'll allow for others to ask their questions and get out of the way. Thank you.
Yeah, I just want to jump in. We did just release the partnership plans annual report. So that's on the website. That's a great place to start to kind of see, how we ended in fiscal 22. I will say that things, are looking a little bit better into fiscal 23 with regards to the medical loss ratio. I don't want to get into too much detail, but I would be, happy to set something up with you to go into way more detail than we have time for today.
I appreciate that. Thank you. Thank you, Madam Chair.
Thank you, Senator. Representative Nuccio.
Thank you, Madam Chair. And, this whole 2-question thing is gonna, this is gonna be a struggle for me. I'm gonna have to be creative. I'd like to kind of, first of all,
don't try to add 6 into 1. Other people have tried and I shut them down.
Come on, Kathy, I'll be very creative here. No, so I appreciate the time. Thank you very much. And thank you, Carol and Charlotte. This has been really informative. I am loving learning all of this new information. It is, it's a eye opener and it's very interesting for me. So the Office of Comptroller's area has a lot of stuff. And as Senator Berthel just said, something that I've focused on since I've been here is definitely the partnership plan. And I know historically the reports have come out and said one thing, but in the end, after all of the incurred but not received claims, all of the runoff and everything, we've seen significant high MLRs and losses. And when that happens, unfortunately, the state of Connecticut, people have to pay for these employee services at a town level, and then the entire state of Connecticut has to pay for them. I think the partnership plan is a good idea, but I think historically, as we've seen through all of its iterations, it has really been a failure, and it's problematic. So I am definitely interested in a higher level look at the partnership plan, and I've gone to a few of the other meetings. I can't remember the name of them now, but where I've asked every time I've been there for the financial standing. And unfortunately, I've been consistently told, oh, we're doing great, we're doing great. And I know you just said our future years look great. And that just, to me, when I look back at testimony and everything, is what we always hear. And then we see 108 MLR. So my question is kind of twofold here, in that the MLR that's being quoted right now, does that include all of the runout? I'm in the insurance industry and I know you need 3 to 5 months for runout. So would that be in there?
So Tammy, just as a heads up, the MLR, not everybody knows what it means. So if we can,
all right, I can explain that.
Stay away from acronyms. It's a medical loss ratio.
Yep. I appreciate that, Kathy. I'm sorry. I sometimes get lost in
what's being talked about. That's all.
Right. Okay. So yes, the medical loss ratio, or the amount of the amount of every dollar paid, how much is actually being paid for claims. In this case, I believe the last medical loss ratio was quoted around 108%. So I'm wondering how many months of runoff that includes, or runoff being the claims that incur after the end of the year. So if you see the doctor in December, that typically sometimes isn't paid up until March, depending on when claims are filed.
Yeah, so Charlotte, you're going to take it, okay? Because I know this is definitely of interest to obviously this is the hot topic, right, of the partnership, and we just released the latest report on that, and I know Sean also released a press release related to it, and things, the last cycle, as a lot of with a lot of medical. There was an uptick in medical services with COVID kind of, when COVID happened, everybody's medical loss ratios were great because nobody's going to the doctor. And then, people started to go back and do all their, do all their preventative and other work. And then the rates went up. I think this is probably a larger conversation, especially since we're approaching 10 o'clock. And I think Charlotte and I definitely have more time, but so we can stay on to finish up everybody's questions. But, as part of saying this is an ongoing conversation, I think that this does merit another, like an add-on, another meeting where we can just focus specifically on the partnership accounting, if that makes sense.
Yeah,
Yes,
I
and
think that, sorry, I'm sorry, go ahead,
I'm so
Charlotte.
sorry. I just wanted to get you, the straight facts here. So we have a medical loss ratio for through June 30th of 2022 of 106. So that is what's reported. That's in our financials. And then through June 30th of 2023, the latest projection that was updated in early January is 98%. But like Carol mentioned, there was a lot of issues this year, with the projections that our actuaries made, just sort of the increased utilization and then just the high cost overall for medical services right now. But yeah, we'd be happy to have a more in-depth conversation.
I would appreciate that. And if you could send the agendas and that, I would appreciate it. And the only other question I have right now is specifically around if we look at the policies offered through the partnership plan, those plans, can you please just confirm they are or are not subject to the same taxes, fees, and assessments that we're putting on industry, and specifically also the Access ET plans, all of the fully insured market? I know we have several state assessment fees, and I'm wondering if those are applied to the partnership plan also.
That I don't know. I don't know if you know that information, Carol.
I don't. I would have to get that information.
Yeah, I can talk to our healthcare division and I can
Yeah.
get that for you. But just to clarify, so you are asking about, let me just write this down. If the partnership plan, if they're have the same fees that like the private market does.
So basically, taxes and assessments are things that are put on industry, specifically some of them around mandates, and the major assessments we have in the state of Connecticut are vaccination assessments, the public health fund assessment, Department of Insurance funding, and all of that. These are applied on all fully insured plans, and I believe the partnership plan and also some of the ASO plans, like we can go into this all day and everybody else has their hands up. So I'm going to be respectful of the fact that Rep Porter and Rep Dathan have questions, and I'm hopeful that we can just have an in-depth meeting to review the partnership plan going forward, because I do think it's an area where we could definitely see some improvement and some savings.
Yeah.
Thank you
I don't
both
believe
very
that
much.
Thank you. And I don't believe the partnership plan has any special treatment. So I think but we will confirm that. So
Thank you so much.
Yeah.
Representative Dathan.
Good morning, everyone. Thank you so much for the presentation this morning. And it seems like there's been a great seamless transition thus far in the position of controller, and thank you for your report. It was really great. I particularly like the fun facts and the 60-second video. I think it's going to be very useful to residents in our state and the work that you all have done on Core CT. I just wanted to say thank you to Rep Nuccio and Senator Berthel and their questions on the partnership plan. I too would really like to explore that further. So I think it is really important that we have some bit more transparency on that plan. So thank you. The two questions I have, the first is, do you all do any sort of analytics or metrics in comparing our sort of ratios with other states or other industries? Things like, cost per state employee, or do we do like a cost analysis of residents in our state? Just kind of want to have an understanding what we do to kind of think about where we stand in terms of our cost basis as part of our state.
I mean, I believe a lot of that is being done. I would say that it's more, Charlotte, it would be more like, I think OFA and OPM that do more of that analysis than our agency that does that. But we could look in to see where some of that information is and provide that to you. I think it's more the Office of Fiscal Analysis that does some more of that, and then they do have a lot of reporting that they send out with regards to that type of information.
Okay, and if you can send anything like that to our administrator, Susan Keene, that would be really helpful.
Yep.
My second question is similar themed in regards to sensitivity analysis, particularly around the volatility cap and some of the other things in our state. I know we see a lot of, markets are quite a bit different in 2022 than they have been in the past. And I really have a lot of concerns how that will affect our budget reserve fund going forward. So do you all do that? Or again, is this part of OFA?
Well, I mean, I think I think the answer, I think we all do it. So I think OFA does it. I think OPM does it. I think we do it. So part of that monthly letter is looking at projections and saying, based on market factors, how is this going to impact sales, like taxes, income taxes. So how sales taxes. So we do look at how that's going to impact the surplus, or hopefully not, but surplus, or maybe put us in a deficit position. Fortunately, we have that budgetary reserve fund that sort of is there to, in cases where we do have reduced revenues, especially if they're going to bring us below the budget. So that is something I would say, that letter of the first we talked about, that is a monthly review and projection and of all revenues and expenses, and seeing what we think might change based on economic and other factors.
It would be great to see some of the details around that, if you can share that with the committee, because I see the letter and it's very sort of high level, but I kind of like to dig in. I'm a CPA by trade, so this is my bread and butter, and I would really like to get a better understanding of that. So thank you so much for your presentation, and thank you, Senator Austin, for letting me ask questions.
And I would just say, the other thing I would just say is the OPM letter does get into more detail, I would say, than the letter of the first, right, Charlotte, on some of the projections. So we can share, we can show you where that is, and you could look at that, and that might, having that CPA or accounting background, that may be more, might be more information than some people might want to see, but with your background, maybe that you would want to see more of the details behind it that OPM provides.
That's great. Thank you so much.
Thank you. Representative Porter.
Thank you, Madam Chair. First, I just want to congratulate Comptroller Scanlon again, and you and your team for this outstanding presentation. Definitely looking forward to this being an ongoing process. The first question that I had, you had referenced the Connecticut Essential Worker Program early on, the $34 million that had been allocated, and you said that there were funds that remained that were going to be swept. So my question is, how much of those funds remain in that essential worker fund?
I don't have the answer for you, because they're still in the process kind of finalizing the expenses. So we obviously have to finalize the expenses, see how much is left, and then move that into the premium pay program. I mean, I guess I would say maybe it's a good thing that program was not has funds left over, because that means we didn't have people directly impacted from contracting COVID, whereas the premium pay program is just people who work during the period for supporting being essential workers during the period of COVID. So I don't have that. I can get the answer for you, but again, it's not finalized yet, so we don't have the final number to be able to provide it. I could give you an estimate.
Okay, thank you for that. And I look forward to the final number, really, out of curiosity. And the other thing, I just want to piggyback, Representative Dathan really talked about the other part of what I want to be able to further discuss going forward around the volatility question and how that would impact the surplus. And if we could delve deeper into the discussion around the economic indicators as they relate to the labor market, inflation and interest rates. We call it inflation, but I think the thing that bothers me the most is that, why are we looking at prices so high when, corporations are experiencing a 70-year historical profit margin? So how do we address that so that consumers are not suffering at the rate we are? And then, of course, the GDP and the consumer spending. So just something to put on the radar for when we get together again. I would really like to see a more in-depth explanation and coverage on not just what it is that's impacting us, but what are some of the suggestions that you guys would give us as the Appropriations Committee members to do something really effective that's going to be impactful for the people we represent and the kind of hurt they're experiencing in their pockets right now.
Yeah, 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 and Charlotte is, I'm a former economist, and she could talk economics all day long, and it, and none of it is, unfortunately, none of it is black and white, right? There's a lot of, nothing's a bright line. Everything is,
Right.
there's so hard to predict
Nuance.
behavior and how the market's going to do it. But if anyone can do it, Charlotte can.
Well, I
Thanks,
look
Carol.
forward to that conversation, Charlotte. You have a lot of
Yes.
questions around
Yeah.
that.
I think a lot of the times, when you hear about these things, it sounds very factual and you forget just how much, it's hurting everyday people. So I try to bring that human side into the discussion because I think it's really important. So I would love to have those conversations.
And
Thank
I think the
you.
good news is I think the gas tax was huge. I think, Charlotte, when you do your when we talk about the consumer confidence, you said like the single largest factor that impacts consumer confidence are gas prices. So what the state has done with the gas, reducing the gas tax and phasing, for a long period of time and phasing it back in, I think that, by itself has been huge for the constituents.
Well, thank you. Thank you all. And thank you, Madam Chair.
Thank you, Representative. Representative Nuccio for the second time.
Thank you, Kathy. I'm so sorry. If I may be allowed, I just have one other quick follow-up question.
Mhm.
Thank you so much. You had mentioned the part of the reason the medical loss ratio, you're gonna have to catch me on that, Kathy, if I do it again. The medical loss ratio being at the 106, 108 indicated that we were seeing more people go back and get procedures and stuff like that didn't happen during COVID. Can you confirm, I believe this is the year, but I'm not 100% sure, but did we not put $40 million excess, 40 million federal dollars into the partnership plan to try to account for that? And if we did not do that, what would the MLR be plus the 40 million? You may not have that answer. That's totally okay, but it is definitely something that I'd like to discuss because I think without that 40 million, we'd be at a significantly higher medical loss ratio.
Okay.
And
Yeah, I wrote down the question, and obviously, we talked about there's, that's why we did the OSC overview. We have 6 divisions. I am I am the lead on one of the divisions. So
yeah,
we have
I know.
I was hoping that was helpful. So we have other resources who know this stuff better than I do, who breathe it every day, partnership every day, and that's Josh Wojcik. So we can reach out to him, and I'm going to assume that, or I know when we have the partnership meeting follow on, we'll have him attend. And he's definitely more well versed in it than me. Like I said, I just know a smattering of it, peripherally from discussions as a division as a whole. But
there's a bus and your toe got thrown under it. I understand. I just want to put it out there so when we have the meeting, we can discuss it. Thank you again so much for what you have been able to offer. It's been very enlightening. I really appreciate it. And thank you, Kathy, for humoring me. I appreciate that.
So I see no more hands up right now, Carolyn, Charlotte, and any information that gets given out to members of the Appropriations Committee as a result of these meetings would go directly to our administrator, Susan Keene.
Okay.
And then she sends it out to all members of Appropriations, so we all get the same data. That does not preclude you from meeting individually with legislators. So that's different. But we'll set up another meeting relative to the partnership plan to have that conversation. I appreciate everything you did today. Please send the PowerPoint presentation over to us. And I think your information was very valid and informative to us. And we really appreciate Comptroller Scanlon for allowing us to meet like this. And we will not take advantage of it, but we'll probably have at least 1, maybe 2 more meetings relative to this. And relative to the pension plans, teachers' retirement, and the state employees plan, I want to understand how we can move the teachers' retirement system over to the Comptroller's office for you to have the information. And I'd like to understand relative to the pension plan for the state employees, the normal costs are around $167 million. But we're still paying on the sins of the past. And I'd like to understand how many retirees and separate from active duty that you have that are tier 1, tier 2, tier 2A, tier 3, and tier 4, and how many active duty employees are in any one of the tiers. So we need it both for the retiree section and the active duty section. So
So you want the split out of active versus retiree by tier, number of
Please.
employees? Okay.
Yep. Yep.
And then, yeah, and then with regards, yeah, and so, I mean, we have our retirement services division. They don't administer the teacher's retirement plan, but we do have access. We have access, even though we don't have access. It's not in core CT, but we have access to their information, obviously. And the actuaries, are the ones that provide the SIRS information, also provide for teachers retirement. CAVMAC does that for teachers retirement as well. So we're plugged in. It's just not on core CT, the system itself. But that is something that we're working with the teachers retirement administration in order to get them onto core CT going forward.
we
So
want to know
yeah.
how the plans are, what is the percentage that the plans are funded at for both of them. And there's a possibility of a bill coming in that was talked about at a press conference to add in another 2 years to any teacher who was teaching during the pandemic. Them getting it, we need to know how much that would cost and what that would do to the teacher's retirement system. So we have to understand that far better than we do right now. So
Okay.
those are another area. I find it fascinating what people find that they want to talk about, but I always want to talk about the retirement system, because if we could get rid of a debt that we have on the retirement system, it would loosen up our ability to handle so many other things in the budget. So thank you very much. Representative Walker, any following comments?
No, thank you. Again, I want to thank you for all the information that you provided. And like I said, you have done a great job of teasing us with some other ideas and things that we need to have. And I appreciate your frankness in answering questions and staying within what your expertise is. But we look forward to continuing some of those things and getting a little deeper into it. So thank you and have a great day. Thanks.
Thank
Senator
you.
Berthel?
You as well.
Senator Berthel?
I'm all set. Thank you, Madam Chair. Thank you again for
That sounds like
a very good presentation today. Appreciate it. Look forward to future discussion regarding the issue we already discussed.
Representative Nuccio?
This has been very enlightening, and I am so happy to be on Approach, because this is the stuff that tickles my brain. So, I appreciate the work you guys have done. I look forward to having many more meetings going forward, and I really look forward to working with everybody on the Appropriations Committee to do some good stuff. So thank you guys very much. I really appreciate it.
All right, thank you very much, ladies. We really appreciate everything that you did today. Everybody have a nice day. Madam Administrator, what do we have next?
What do we have next? Well, actually, Madam Chair, we are in the process, as I teased the other day at our organizational meeting, we're in the process of organizing a Medicaid 101 workshop for people. So stay tuned. That we're working on that today and tomorrow. So,
And do we have
we also have next, more importantly, thank you, Madam Chair. More importantly, we have our public hearing followed by a committee meeting next Wednesday, the 18th at 2 p.m. on the state police collective bargaining agreement.
So you all should have already gotten a copy of that. If you did not, just let our administrator know, and she'll resend it to you. And we will have a briefing from OFA. We will have the public hearing, and then we will have the committee meeting. So is that it for the next week or so?
That's it.
All right, very good. Everybody have a nice day.
You too. Bye.